Good evening, guys. It's Saturday, November 19th. My name is Dave Coker, and this is Talking About Finance, where you know the routine, 7 slides for 7 days. And here we are again, men and women of different places, of different origins, of different times. We come together for one noble purpose, to get rich. And as different as our backgrounds are, we acknowledge one universal truth. The one way, the best way, the only way to achieve our goal is to buy and hold. And it doesn't matter what asset we buy and hold. Stocks, bonds, property, even crypto. As long as one inviolate truth, one key principle is realized, we get paid to hold these assets. The chumps in the world are the ones who try to buy low so they can sell high. They rarely achieve their goals. And by that I mean, without taking on lots of risk, without taking on lots of uncertainty, without taking on or realizing lots of tension. They need to commit lots of capital. We are different. We want one thing, cash flow. And we don't care how it's achieved, from what asset, as long as we get paid. Every day of the year, I'm getting paid. What self-described traders are getting paid now on a Saturday night? They're not. I am. They ain't. And this isn't just bullshit. Look me up on LinkedIn. I'm the real thing. I'm not somebody who got into stocks or cryptocurrency over the past couple of years and now describes as a trader. What a joke. What absolute fools. They're soon going to see the markets the way we do, as places where we can make compounding work for us, not against us. A place where we can make compounding work for us for long periods of time. It works in our favor. The markets are a place where we can get rich slowly, so welcome. It's absolutely wonderful to see you all here tonight, and there's no time to waste. Let's get started. So last week, the S&P 500 was down about 69 basis points, 0.69 of 1% of the week. Now it's down about 17% year to date. You can see the sectors there. Only consumer staples, healthcares, and utilities performed well. Everything else got whacked. Pay attention to the sectors. The VIX traded down to 23.52. It was as high as 24.6 at one point last week. So again, we have to be suspicious about this rally until we see a blow-off. Sharp selling with a VIX north of 40. We got to be careful. The 10-year note closed the week at 3.83%. It's flat, but it's still up flat on the week, I should say. It's still up about 2.3% year to date. Oil closed the week at 80.24, down some 9.8% on the week. It's up about 6% year to date. So we're finally starting to get some chill weather here in the UK. It's going down to about 5 degrees centigrade this evening. And Saturday in Essex is well underway. We went to a Wetherspoons pub, another packed evening. And contrary to what the doom-casting media says, we're seeing people out and about. We're seeing people enjoying themselves. So this evening we got more pints in mind. After, of course, we do this video and a couple other videos. The night is young, my friends, and we're out for a good time. If you caught my show last week at Sin Club, congratulations. I did see a few people from the podcast or from the YouTube channel there, so great. But before that, 7 slides for 7 days. You know the routine. What me and my buddies, about 50 or so ex-investment bankers, current investment bankers, all around money freaks, talk about all week long on a private Telegram channel. I bring the best for you. I suffer for you. So if you see me out and about, buy me a pint. Got some pints last week. Very good. Let's go. So guys, really interesting thing on CNBC. We talked about this all week on the channel. And yeah, some people are saying that the stock market won't bottom until retail investors give up. Unfortunately, we do see retail investors pushing money in. So yeah, I tend to believe with her, but I'm not totally sure overall when this is going to take place. It doesn't really matter though, because we buy stocks that pay us dividends. That's the only reason we buy stocks. So we don't really care where retail money's up to. And inflation is in the system. It's a global phenomena. This is Germany, guys. And look at this. It's starting to really peak. Look at that. My God. We're seeing PPI go up to about 45%. Now keep in mind, guys, the average in the 1970s was 16%. The average before this disruption we had in Germany was well below 2%. The post-World War II peak was 24%. This is something unprecedented, something we've never seen before. And keep in mind that last slide, as I mentioned, was PPI, the Producer Price Index. It's what producers pay for commodities, for goods, for services, and then they repackage and sell to consumers. Then it shows up in CPI. Say, yep. Although CPI is high now, it's going to spike. And I'm often asked about inflation. I'm often asked about the wisdom of buying cash flow generating assets in a high inflation environment. Well, keep in mind, guys, dividends aren't fixed. Dividends can adjust. As producers raise prices, they, of course, can pass dividends on to shareholders. So, yeah, I'm quite comfortable holding dividend-paying stocks. I'm even more comfortable with my gold and silver trade. Now, recall, I've talked about this a few times. I have gotten some PMs about it. In March 2019, I moved 71% of my retirement money to gold and silver. I've talked about this many times. This is not some new position I invented tonight or over the past 3 or 4 weeks. Go back the past couple, 2-3 years in this channel. You can see I've been talking about it. And I'm quite comfortable the way that trade's played out. Since March 2019, you can see silver up 43%, gold up 38%, S&P 500 up some 34%. We're not looking at year-to-date numbers here, guys. We're looking at aggregate numbers since March of 2019. Oh, and Bitcoin, as I always say, Bitcoin for fun, up 185% over that period of time. So yeah, I'm quite comfortable. Thank you very much. If you ain't got any gold, if you ain't got any silver, if you ain't got any property, get some. The future, my friends, is intangible, real, physical assets. And Bitcoin for fun. And once upon a time, we heard a lot of talk about Santa Claus visiting Wall Street. Once upon a time, we heard a lot of people babbling, expecting a Santa Claus rally on Wall Street. Well, I'm here to give you the bad news, guys. And this chart didn't render too well. If you go on Medium, you can see the original chart. You can get a feeling for it. I went back, I grabbed all the data from daily data from 1990 all the way up to year-to-date in 2022. Cut it off in 2021. I calculated 2 metrics. I calculated the annual return for every year, and then I also calculated the Santa Claus rally. And a Santa Claus rally, of course, the purest definition is the return on the stock market in the 4 or 5 trading days that run up to Christmas, the week before Christmas. Guys, I also discriminated. I put another factor in. I just didn't look at Santa Claus rallies because you can see the bulk of the time, 22 out of these 32 observations, the bulk of the time, yeah, the market goes up as Christmas approaches. However, we have to ask ourselves a very critical question. When the market is down year to date, what about the Santa Claus rally? Well, Santa ain't coming to Wall Street this year. Of course, I'm not totally certain of that, but it's entirely possible. Of course, if you buy cash flow generating assets, you don't care. I just sit back and watch all the drama, all the fun. And this is really cool. This has been pushed all over crypto Twitter. We've got 2 different Venn diagrams here. On the left, we've got perception. On the right, we got reality. The perception is crypto's this huge universe and Bitcoin's a small part of it. It's always been bogus in my view because if you look at the market cap of Bitcoin, it dwarfs. Even before last week's unpleasantness with FTX, it dwarfs what's going on in the crypto space. In fact, crypto's not a subset of Bitcoin. Bitcoin stands alone, guys. Bitcoin is there to protect your wealth. In spite of what all the crypto clowns can claim, that this is one universe, things are different in the Bitcoin space. Proof of stake, decentralized finance, NFTs, or yield farming, doesn't really matter. You're taking on exceptional risk, guys. The best way to engage crypto, the only way in my view, is simply to buy and hold Bitcoin. Just buy it, put it in an external wallet, and hold it. It's what I've been doing for years. It's what I've been telling everybody to do for years. I've been advising people, buy Bitcoin, get it off the exchange, put it in a wallet, just hold on to it. Don't ever sell it. Sure, we're seeing the price of Bitcoin get pounded on now, but I can tell you something. This is all over my blog, FinTech Flash News. We know Wall Street, institutional money, is moving in heavily to purchase this Bitcoin while it's beaten up, while it's down in price. Don't sell your Bitcoin, my friends. Hold on to it. Keep it in an external wallet. Sit back. Wall Street's moving in. That's it, guys, for this evening. I hope you have a great weekend. I hope you had a good Saturday so far. Mine is excellent, and we're gearing up for an even better Saturday night. Take care, guys.